Imagine a scene like this. You cast your vote. You glance at the elections. You follow the news. But there are some people who affect your life. And you can't see their names anywhere. Not on the ballot, not in television debates, not at rallies. And yet, they can influence the value of the house you live in. They can determine the future of the company you work for. And sometimes they can even indirectly influence politicians' decisions. Strange, isn't it? Because these people, they don't produce anything. They don't sell anything. They don't invent anything. They simply move money. But today, that has a much bigger impact than you think. Because today, money doesn't just talk. It sets the rules. Now let's look at the center of this power. Hedge funds. The name may sound a bit complicated. But here's the reality. These are private investment pools created by gathering the wealth of rich individuals. But they're not like ordinary investment options. There is only one goal here: maximize profit. How it's achieved doesn't matter much, as long as it stays within legal boundaries. Think about regular investment funds. Their risks are limited. They operate transparently. They report to the government. So the system is controlled. But what about hedge funds? They push the boundaries of the system. Fewer rules, more freedom, and greater risk. So you can think of it like this. A normal investor drives on a safe road. A hedge fund speeds through unknown terrain. So why are they so powerful? The answer is simple, but its impact is huge. Leverage and speculation. First, let's look at leverage. Let's say you have $1 million. Normally, you would invest that. But a hedge fund might think, I can multiply this. It uses that money as collateral and borrows much more. Now it controls a far larger amount. Even a small movement creates massive results. A 10% gain can double your capital. A 10% loss can wipe everything out. So what's really happening is this. Small risks can lead to huge outcomes. There's also the idea of making money from decline. It may sound strange, but in finance it's very common. If you think something will lose value, you can profit from that. You borrow a stock, sell it immediately, buy it back when the price drops, and keep the difference. But if the price rises, your loss can grow without limit, so this game is always risky. In the beginning, this system wasn't this aggressive. When it was first created in 1949, the goal was simple: reduce risk. But over time, the system changed. In the 1980s, rules started to loosen. Money flooded the markets, borrowing became easier, and hedge funds grew rapidly in this environment. They were no longer just investing. They started shaping the markets. In 1992, something unforgettable happened. A hedge fund manager named George Soros bet that the British currency would fall, and he was right. But this wasn't just an investment success. The Bank of England lost, so a single individual shook an entire country's currency. Then in 1998, another collapse occurred. There was a fund called LTCM. It included Nobel Prize-winning economists. Its mathematical models seemed flawless. But when the crisis hit, everything collapsed. The system was so fragile that intervention became necessary. At that moment, hedge funds learned something important. If you are big enough, you won't be allowed to fail. And that idea changed everything. Let's come to the 2008 financial crisis. Homes were being sold. People were losing their jobs. Banks were collapsing. But at the same time, something else was happening. Some hedge funds were making enormous profits from the collapse. Some even saw it coming and positioned themselves for it. So the system evolved into something different. Even disaster became an investment opportunity. After the crisis, banks were placed under strict regulation, but hedge funds remained largely free, and they filled the gap. They are no longer just investing. They provide loans to companies. They buy houses. They turn neighborhoods into rental systems. They can even lend to governments. So they began to take over part of traditional banking. This is known as shadow banking. Think about this. You apply for a loan at a bank and get rejected, but a hedge fund might approve you. The difference is clear. The interest rates are much higher. The conditions are much stricter. And if you fail to repay, you can lose everything you own. Today, it's not just about money anymore. Data has become part of the system. Hedge funds buy satellite images. They monitor factory production remotely. They analyze consumer behavior. They use algorithms to predict decisions. So in reality, they try to predict what you will do before you do it. That's why some people describe them as the intelligence agencies of capitalism. And here is the most ironic part. Everyone is part of this system, even if you don't realize it. Your pension funds, insurance systems, and large institutions invest in hedge funds. So indirectly, everyone becomes part of the system. And this system keeps getting stronger. Because they don't just observe the markets. They influence them. They shape policies. They can even affect the direction of crises. But it is important to understand this. Hedge funds do not see themselves as villains. From their perspective, they are providing liquidity, making markets more efficient, and taking advantage of opportunities. And in some ways, they are right. But history tells the same story again and again. When power becomes too concentrated, the system becomes fragile. In the past, empires were built with armies, ships, and trade routes. Today, they are built with debt, data, and financial systems. No one is conquering land anymore, but something else is happening. Debt is being bought. Markets are being shaped. Systems are being controlled from behind the scenes. And perhaps the most important point is this. This system has grown so large that the economy can barely function without it. But history gives a clear warning. No system can survive forever on risk and debt alone. At some point, imbalance appears, and then the real question becomes, not who controls the system, but who survives when the system collapses.